On January 3rd, 2026, something happened that shattered a global illusion. Not a rumor, not a cyber attack, not sanctions. A sitting head of state was physically removed from power by U.S. forces. American Special Operations troops landed in Caracas. They entered the presidential palace, and within hours, Nicolás Maduro, the president of Venezuela, was gone. He wasn't overthrown by voters. He wasn't captured by international police. He was taken by force, flown to the United States, and charged with drug trafficking and terrorism. Washington called it a law enforcement operation. Much of the world called it something else, an invasion. But here's the part you probably didn't hear in the headlines. This wasn't about drugs. It wasn't about democracy. This was about money. More specifically, this was about what currency oil is sold in. Because Venezuela didn't just have a president the U.S. didn't like. Venezuela had something far more dangerous. The largest proven oil reserves on Earth. More than Saudi Arabia. More than Russia. And for decades, Venezuela followed the rules. They sold oil in U.S. dollars. They recycled those dollars back into American banks, weapons, and debt. That system has a name, the petrodollar. But 6 years ago, Venezuela stopped playing along. They sold oil to China, in yuan. They traded with Russia, in rubles. They used barter deals with Iran. No dollars, no Wall Street, no U.S. financial chokehold. And now, their president is sitting in an American prison. This is the story of how that happened, and why what just occurred in Venezuela may have ended the petrodollar era forever. The petrodollar isn't a law. It's not written in any treaty. It's an understanding. If you sell oil in U.S. dollars, you get access to global markets, security guarantees, and protection. If you don't, you find out how much power the U.S. military really has. For 50 years, this system worked beautifully. Oil exporters got stability. America got cheap energy and unlimited demand for its currency. But there's one thing the system cannot tolerate: oil priced outside the dollar. That break began in 1999 with Hugo Chavez. Chavez looked at Venezuela's oil and asked a forbidden question. Why should we sell our resources in a currency we don't control? He nationalized oil. He expelled Western companies. He openly attacked the dollar system at the United Nations. And the U.S. response came fast. A failed coup in 2002, economic pressure, political isolation. But Chavez survived, and when he died, Nicolás Maduro continued the same strategy. That's when the financial war turned lethal. Starting in 2015, Venezuela was declared a national security threat. Not because it could invade the U.S., but because it could sell oil without dollars. Sanctions followed. Oil bans, asset freezes, shipping restrictions, technology embargoes. Venezuela's oil industry collapsed. Production fell over 80%. Revenue evaporated. Inflation exploded. The public narrative was humanitarian concern. The real outcome was clear: punishment for leaving the dollar system. Then came the deal that changed everything. In late 2025, China and Venezuela announced an $80 billion agreement. China would rebuild Venezuela's oil infrastructure. In return, Venezuela would ship over 1 million barrels per day, paid entirely in yuan. This wasn't trade, it was permanent alignment. And Washington understood what that meant. If China locked in the world's largest oil reserve, the petrodollar was finished. So the U.S. acted. At 3:47 a.m., Special Operations Forces entered Caracas. This wasn't covert. This wasn't denied. It was conducted under open military authority. Maduro was captured, removed, and replaced. Within 48 hours, Venezuela's new leadership announced all oil sales would return to U.S. dollars. The China deal? Suspended. Mission accomplished. Or so it seemed. The U.S. thought it was sending a message of strength. Instead, it sent a confession. that the dollar is no longer maintained by trust, but by force. Oil markets panicked, prices surged, the yuan strengthened. China, Russia, and multiple emerging economies issued joint statements calling for alternative payment systems. 14 countries accelerated de-dollarization plans. Not loudly, quietly, because Venezuela taught them the lesson. Leave too slowly, and you get invaded. A currency backed by fear is fragile. The moment countries believe there is another protector, another system, another clearing network, they leave. China is offering exactly that. Infrastructure, energy contracts, payment systems, security partnerships. Not because it's kinder, but because it understands power. This wasn't the end of the petrodollar. It was the moment the illusion broke. From here forward, every oil-producing country asks the same question. Are we safer inside the dollar system or outside it? And after Venezuela, that answer is changing. The dollar won't disappear. But dominance is not permanence. Empires don't collapse when they're weak. They collapse when they reveal how they stay strong. January 3rd, 2026 did exactly that. The petrodollar didn't die quietly. It showed its teeth, and the world started looking for the exit.